Good morning, everyone. Good morning, brothers and sisters. Good morning, uncles and aunties, daddies and mommies. Welcome to the top-down analysis brought to you by Value Flow Trading. This morning, the 19th of February 2024, it's 7:30, and as you all know, it's 8:30 rather, and as you all know, it's TDA o'clock. Welcome you all to the TDA once again. It's brought to you by Value Flow Trading, and this TDA is proudly powered by your favorite broker, our favorite broker, Okta, formerly known as Okta FX. So during the course of this TDA, we're going to be looking at the top-down analysis for the following currency pairs and currency indices. We're going to be looking at the US dollar index, and we're going to be looking at USD, Euro USD, and GBP USD as major foreign currencies, and we're going to be cross-referencing that with other currency pairs. We're also going to be looking at XAU USD, which is gold versus the dollar as relating to precious metals. And finally, we're going to be looking at the yen basket and GBP JPY as relating to yen-related currencies. And of course, you all know the drill. And at this time, it's right about time to share the link to the TDA. Now, what are we always telling you guys to share the link to the TDA? It's simple. When we have good offers, we want as many people as possible to enjoy of that good offer. So we want everyone to partake of the good offer we are giving to you guys. So this is the right time to share the link to the TDA. So you're going to be seeing the link to the TDA on the chat box. Now, we want you to do a very simple assignment for us. Share this link with your friends, with your family, on various social media platforms and various Forex-related groups, whether it's on Telegram, on Facebook, on WhatsApp, on Instagram, anywhere you know that you belong to and is Forex-related. Make sure you share this link with them. Ask them to join the TDA unless you are an enemy of progress, which I know you are not. So share the link with your friends and tell them to join the TDA so that they can partake of this good news you are enjoying. So we're going to give 30 seconds for you to do that. So in the next 30 seconds, we want you to share that link. So start sharing the link now. right. Welcome back to the top-down analysis, and quickly we're going to be looking into detail the currency pairs we listed before the break. I know some of you did not share this link while we were on this short break. You're looking at me, I'm looking at you. Your mind is judging you. My mind is not judging me. Next time, make sure you share the link so that your mind will not judge you the way it's doing now. Now I'm back to the chart. Looking at the dollar index, of course, we would want to start from the weekly time frame so that we'll have a broader perspective of what's going on. Now, on the weekly time frame of the dollar index, we saw a resumption in the original trend in the past couple of weeks. And the original trend, like we all know from the monthly time frame, is the bullishness of the dollar index. We had the bullish trend of the dollar index going on for a while as of last year. We had a retracement, which is all this sell to the downside into this very wide order block. At least up to 50% of the order block was mitigated. Now we saw another resumption sometime in January. We saw a resumption to the upside, and price broke structure, giving us a sign that the bullishness of the dollar index had resumed. After that bullishness, we didn't see quite some decent level of retracement. So going into last week, price traded into this order block right here on the weekly time frame. So price traded into this order block on the weekly time frame and started giving us some retracement. So we can be looking out for levels where we would want to see price retrace to. But we need to look at the daily time frame, because the daily time frame gave us a good market structure to show that this retracement is not going to last for a very long time. So let's look at that quickly on the daily time frame. So on the daily time frame, we're seeing decent retracements to the downside, all the while price was making its move to the upside. Although there were some volume imbalances that price left. For instance, the one where I'm going to highlight right now. Okay, so this is the volume imbalance that price left for a while and did not return to. Okay, now it's back. Now this is the volume imbalance that price did not return to as at the time we expected it to. So we're anticipating that if we're going to have a very long retracement, this could be the level where we'll be looking to see price return to. Okay, so price may take out all these lows, all right, this diagonal liquidity residing all the way here. It may take them out and then return all the way to this level, or price may return to somewhere like here. Right, so if we see price breaking structure to come to the downside, these are the potential levels where it's coming to. And lastly, on the daily time frame, we may see the dollar index retrace to this other block right here, because since price left that other block, it has not returned to it. Okay, so this is already giving us insights that we may have a bearish week for the dollar index. All right. Sorry, guys, we're having a little network glitch, but we're back. Apologies for that. Now, back to the analysis we're making on the dollar index. We said we want to see the dollar index start going back up from where it currently is. All right, looking at the daily time frame swing. want to see the dollar index going back up from where it currently is. But if it breaks structure to the downside, you can see the daily order block right here. It's highlighted in a red rectangle. We'll change the color to green so that to signify. Okay, so you should be able to see my screen now. Apologies for that, it has been rectified. So we're anticipating that the dollar index would trade into this level and clear the liquidity that is residing right here. Okay, so today, this week, we may see at least for the first half of this week, we may see the dollar index retrace into this fair value gap, sorry, this order block right here, and take out all the liquidity residing here. So you can see a liquidity sweep that may possibly happen here and take out this guy. So I am seeing that we may have a bearish start to the week on starting from today being Monday. We may have a bearish start to this week, seeing that the dollar index may want to make this play of taking out liquidity right here and trading into this order block before resuming the bullishness of the dollar index once again. So this is the first play I'm looking out for this week. Secondly, on the 4-hour time frame, we can see that the price has retraced into the order block that caused this whole move to the upside, and that is where price currently is. It's been struggling within the order block, seeing some rejections out of the order block whenever price comes back into it. So this may be a level to hold price and push it back up. But because looking at the 4-hour time frame, there are some unmitigated levels right below here, okay, which is this order fair value gap and the order block all the way down here. And then there's a fair value gap to the right, a fair value gap to the left, what we refer to as IOFED. So seeing all this and then the liquidity that is resting right above it, we are suspecting that price may want to make a play for this liquidity into this point of interest we have below here. Okay, so this is the first play we're seeing. It takes a sweep out of this level. Let me mark that level also. So a sweep of this level into this point of interest and then resumption of the bullish trend, or an outright resumption of the bullish trend from where price currently is. So if I don't see any buy confirmations on this current level where price is around 1.104 region, then I'll be anticipating it to get to this level. So in that sense, we're saying that we'll be willing to short the dollar all the way to this level. We're willing to short the dollar all the way to this level to take out this liquidity and trade into this point of interest right below here, unless we see bullish, a sign of bullish resumption, right? Any bullish resumption signature around this level, then we'll be going up. What are the bullish resumption signature levels? We want to see momentum shift. We want to see a shift in market structure happening all around this level. We want to see momentum shift, I'm taking it again, and then a shift in market structure happening around this 104 level, nothing below it, around this level. If we don't see that, then we'll be going with the structure to the downside. We'll be flowing with price all the way to the downside, okay? So that's that for the dollar index. Quickly, we can look at the 1-hour time frame. And looking at the 1-hour time frame, there's no clear confirmation on what we've said. So we want to see market structure shift from this level to the upside and bullish momentum to the upside. All right, if we don't see that, we'll be anticipating that price is coming for this level into this point of interest. Okay, so that is our view on the dollar index. Now, looking at foreign currencies, we're going to be starting with Euro USD as usual. Looking at it on the weekly time frame, right? On the weekly time frame, we saw the Euro USD is showing sign of break of structure to the downside, where price wicked below this low right here. Let me mark that low. You can see that price has wicked below it on the weekly time frame. Okay, and what that means is that price has grabbed liquidity residing below here. All right, upon a grab of external liquidity, we're waiting and anticipating a grab of internal liquidity. Okay, so we'll have to go to the daily time frame to look out for potential internal liquidity where price will possibly trade into. Overall, we are bearish on the euro, but seeing what price has currently done, the stage of price right now is a retracement stage, seeing that it has grabbed liquidity to the downside after an expansion to the downside. So we'll be anticipating for levels where we can mark as our point of interest so that price will trade into those levels. And to do that, we have to look at the daily time frame. Good. Now, looking at the daily time frame, we're seeing that there is a clear and obvious break of structure to the downside in that price closed below this liquidity point. If you remember last week, we were anticipating that price created this liquidity the week before last. Now, we also said that since price has created liquidity, it's going to be time to consume it. And from Monday into Tuesday, we saw a consumption of that liquidity to the downside where price traded below. Now, Wednesday, Thursday, and Friday, price started a retracement to the upside. So going into this week, we want to mark points of interest where we think price is going to trade into. All right. So for the daily time frame, objective has been achieved, a break of structure to the downside. Now, where are the potential places that we'll see a retracement happen? It's not looking so clear on the daily time frame. So we will have to switch to the 4-hour time frame to get a clearer perspective. Very good. Now, looking at the 4-hour time frame, we are seeing that there is a level that price left untapped, which is this level that keeps going off our chart. We've always been highlighting this level every day we come on the top-down analysis. So this level right here that I'm going to highlight in red. Now, very good. Now, this level right here is a point of interest for Euro USD. We've had it for a couple of days now, running into weeks. So we are expecting that Euro USD for the first half of this week, at least before the midweek reversals come into play, we're expecting that Euro USD will trade into this level. So this is our anticipation for Euro USD. I'll be willing to go bullish into the Euro USD all the way up here and then start selling to the downside. First point of interest has been marked. Second point of interest using our good box strategy would be this level right here. So we'll be anticipating to see something like this. Okay, so we'll be anticipating to see price do any of these two things. All right. The first one is a buy into the fair value gap to the left and to the right, which we refer to as the IOFED. The second one will be to retrace all the way to the left shoulder. Okay, so I'm looking out for a bullish euro based on sentiment, and with regards to Euro USD, I would want to see the Euro USD trade all the way up here to give us some fair valuation of price before we start going back down. Okay, so these are the things that I'm looking out for on Euro USD. So what will I want to do based on intraday trading? I would want to see buy confirmations from where Euro USD is, and then once that shows up, I'll be buying Euro USD all the way to this level or all the way to this level. So point of interest 1 and 2 has been marked. If I see the Euro USD showing me signs of buys, I'll be willing to buy all the way to this level. Now remember that our overall outlook on Euro USD based on higher time frame is a sell. So that is also telling us to take caution based on our buys on Euro USD. If it's not going to be rewarding enough for us, we can stay out and watch it play. If not, we can take the trade all the way to this upside. So once you see sign of bullishness on Euro USD or bullish entry patterns showing up on Euro USD, feel free to take your buys on Euro USD all the way to this high, all the way to this fair value gap. That is as TP1. And once price gets to this level, you can take out some profits and then break even and allow price to see if it's going to get all the way to this other high residing right here. That is the first bias for Euro USD. Second bias is that based on overall structure on Euro USD, if we start seeing sell confirmations on where Euro USD is, we'll start going short from where it currently is. If we start seeing sell confirmations, because remember, the overall bias is going to consume the lower bias because higher time frames move the price. So if we see sell confirmations from where Euro USD currently is, I'll be willing to go short from where price is all the way to the downside. And where are we going to be looking out for ourselves on Euro USD? This is the level right here. 1.06560. 1.06560. So when we are selling Euro USD this week, our target will be 1.06560. And if we are buying, when we start buying, if price shows us the buy signatures, when we start buying, we are buying all the way to 1.08400 levels and 1.08800 levels. Okay, so that is that for Euro USD. As at this morning London session, we've not gotten a clear bias on Euro USD yet. That is why we are giving you two outlooks on Euro USD. Once a clear bias is given, definitely the guys on our TDA Plus group are going to get it. Now, you'll be wondering, what is this TDA Plus group we're talking about? Now, the TDA Plus group is a special group that we're going to talk about during the course of this TDA. All right, let's look at GBP USD before we round off this first session of the top-down analysis. Now, looking at GBP USD on the weekly time frame, we are seeing signs that GBP USD is ready to start going to the downside long term. And where are the levels we are looking out for on the weekly time frame? The next liquidity point will be this, definitely after price has cleared this other immediate liquidity right here. Okay, so on the weekly time frame, we are clear that GBP USD is now ready to start moving to the downside. Let's look at it on the daily time frame to get more insights on where GBP USD is willing to trade to. Now, looking at the daily time frame, we've seen that GBP USD, after this burst of structure to the downside, it gave us a decent retracement and then started selling off, but it was unable to clear this low. So we're beginning to wonder, where is GBP USD really tilting to? Now, there's no clear sentiment on where GBP as a whole is willing to move to. So during this week, there are going to be some fundamental releases. We're going to also look at that during the course of this TDA. During those fundamental releases, we may see an injection of liquidity for GBP USD to give us a clear direction. But the most obvious direction that we're looking out for is GBP to the downside. Okay, so based on intraday trading on the daily time frame, we are not so clear on where GBP USD is going to. So we'll have to look at it on the 4-hour time frame to get clear direction on where we're going to. Now, seeing that GBP USD has mitigated all the imbalances it created on its way downwards, there is no other place that we're looking at it trading into, if not to the downside. Now we've seen a grab of liquidity that has happened right here, a grab of Friday's high that has happened. Now, after this grab of Friday high, the next thing we're waiting to see is that GBP USD starts going back down. All right, so on our 1-hour time frame or any entry time frame that we use, we would want to start seeing signs of GBP USD to the downside. Once that happens, we'll be willing to go short on GBP USD. And what are the signs we're looking out for? We're looking out for bearish momentum to the downside, and we're looking for shift in market structure for GBP USD to the downside. Once I see these two things playing out on GBP USD, I'll be going short on the pound. Okay, so these are the two things that I'm looking out for. For GBP USD, my bias is a sell, a clear sell on GBP USD. Once I see my entry signatures, I'll be going short on GBP USD. Okay, so with that being said, we'll come to the end of the first session of the TDA. Now we're going to go on a very short 30 seconds to 1 minute break. And while that is happening, a link is going to be sent to your chat box. And what is the use of this link? Very simple. If you want to join the TDA Plus group, we have a separate group, a very exclusive group, where precise entries and exit points from this TDA are dropped. So this is to say that after we are done with all this TDA, we have a separate group where we inform them of where we're entering a trade and where we're exiting the trade. We have various analysts here on the floor. We have Mr. Lekon, we have Abigail, we have Cynthia, we have Demola Global, and we have myself, and of course, we have our boss, Ejimi, the profitable investor. Now, when we do the TDA like this, we used to, in previous time, have a separate group where we share our markups and exit points and entry points for all our trades. But now we are making it open to you all, thanks to your favorite broker and our favorite broker, Okta. Now, on this TDA group, on this TDA Plus group, we share precise entry points and exit points and how we manage our trades. So to be part of that TDA group, we're going to be sharing the link to do that. First thing you need to do is to sign up with our preferred broker, which is Okta, on using the link that is going to be sent. Yes, the link has been sent. Now, using that link, you're going to sign up with Okta. Secondly, you need to fund your account with $500, $1,000, $750, $2,000. As much as you can fund, make sure you do so. Once you funded your account, then you're going to send us a screenshot as a proof of funding. Once you've done that and you have been verified, usually it takes between 3 to 5 minutes to verify that you funded your account and that you signed up using this link. Once you've done that, we're going to share this, we're going to add you up to the group where we share our markup. So it's a very simple 3-step process. Sign up with the link on your chat box, fund your account with $500, $1,000, $200, as much as you can. Then send the screenshots to us. You get verified, you get added up to the group, you start trading alongside one of the finest traders you can find in the whole of Nigeria. We make bold to say that, all right? So while you're doing that, we expect you to be doing that, by the way. So while you're doing that, we're going to be starting the second session of the TDA.
To the London session of the top-down analysis brought to you by the Value Flow Trading team in conjunction with our dear boss, Olufukeji, Ejimi, Adegbeye. And it is powered by your most preferred broker and our most preferred broker, Okta. Now, like my colleague said earlier on, if you are not trading using Okta, then you're on your own. And if you truly want a profitable, week, like we said earlier, trading alongside with us here on the floor, then you need to move and start trading with Okta. You need to start trading with Okta. So moving forward this morning on our top-down analysis, I'll be taking us on gold. As we all know, the precious metal is very precious. So if you are not trading it, it's you. And if you are trading precious metal and your name is Precious, then the Precious Square. All right. Going forward on gold, our analysis for the week, we've seen, looking at the weekly time frame, we see clearly that gold is very bullish upside. However, for the past few days now, we've seen it, ranging here. But last week, we can see gold break all the way down, clearing this last low to our point of interest, POI, which is this daily order block. However, on the 4-hour time frame, we saw a level where we expect it to turn back from, and that is what it did here. That was on Wednesday, and it traded all the way to the upside. Moving forward this week, what are we seeing on gold? Let's see on the weekly time frame first. On the weekly time frame, we can see clearly that gold is strongly bullish. And when you see that, you see it forms a lot of high here, which you can see the first test, the second test, the third test. Now it pushes through with this week and even closes above with some level of body. However, we are still looking at gold, breaking out of this level because of the recession that is looming everywhere now. Now, moving forward now on the daily time frame, like we said earlier, we expect gold to still rally. However, there's still levels where it can easily short to before the rally continues. But for today, intraday, what are we seeing on gold? On the 4-hour time frame, we can see gold, trading towards this 4-hour order block here. Yes, and that is where we expect it to short a bit from, and we can easily take it. Where are we expecting it to rally to? Where are we expecting it to short to if we just want to take this slight one? And remember our schematic. That is one thing that we look out for in taking our entry. So on the 4-hour time frame, you can see there is not yet a very clear structural shift to the upside. However, if you look at it on the 1-hour time frame, you are going to see that well. Now, on the 4-hour time frame, looking at our schematic, which is the boss strategy, we can see that this is a shoulder here, and we can see the sweep, but price has not really come all the way to tap into the shoulder. However, on this 4-hour time frame, we can see clearly somewhere around this level. You see this last order block here, and that is where price came into and reversed back to the upside last week, Wednesday. Now, moving forward for today, remember today we have bank holiday. We are still going to check the calendar just to be sure and to know where to step out of the market or stepping into the market, and at the same time know how to manage our trade for the day because of the bank holiday that we are having. Now, if you look at it on the 1-hour time frame, you can see clearly on the 1-hour time frame, price, like boss said last week, that towards the end of last week, that is Thursday and Friday, we are expected to see price, covering all this void all the way to the upside, and that's exactly what price did. Now, where will I be willing to short gold if I truly want to? Remember, we expect DSY to tap a little bit down, which is going to give us a rally of gold. And right now, where gold is currently, this is not yet my own POI for shorting gold. However, we can see price may just get to somewhere around this level here, and we begin to short it all the way to the downside, which is also giving us some level of our schematic. If you look at it, this is more of a shoulder. Let me mark this level here. This is more of a shoulder, and we expect gold to tap all the way into that level. So if you want to short gold and you are shorting right now, then you are going to have a very large SL of like 80 to 100 pips, and that is not a good trade for me trading gold. However, allow price to get to this shoulder at the top here, and you see this last bearish candle here. That is another zone, and at the same time, we are seeing a very strong order block here that was consumed by this last candle. So this is also another place where is going to give us a confluence to short gold. But if you look at it on the lower time frame on 15 minutes, let's see what exactly is happening around that side. What has price done at that side that we mark? Now, if you look at it, that is another clean confluence, which was on 13th of February, 2024, last week, Tuesday. There was a level of price action that is going to give a clarity there. Now, if you look at it, this is a clean shoulder that was broken, but we've not seen price traded into that level, and that is why I'm marking that level as our PO high. For those who are trading live with us on our premium group, where we have our active trader using Okta, you know, when we call this particular trade for the sell. So we are still expecting price to come back to that zone. Then at that specific entry, we are going to get that call and we go short again. So when we take that trade, it's going to be a very minimum SL of less than, let's say, less than 25 pips. Yes, and that is a good trade for gold. And what margin you are risking 25 pips to get 1:4, 1:3. And it's very, like we all know, gold definitely, we call on it, it delivers. So that is our outlook for gold. Right now, looking at the lower time frame, I know someone will say that, yes, our signature already printed here. This is our signature. We have this is a sweep, and we have forceful break. However, remember, the higher time frame have more influence on the lower time frame. So if you are seeing it on the higher time frame, why not patient? Be patient and see it play out. Remember, that is the key factor that makes you a profitable trader. Ability to wait for your setup, all to align and take it when it aligns. That is what makes you a good trader, not just gambling. If you just jump in and out anytime, any day, that is gambling and that's not trading. So that is that for the precious metal. If you are precious trading the precious metal, then you are on the winning side. All right, let's move to the yen basket. What are we seeing on the yen basket for the week? We are going to look at it. You know, for those who are on our mailing list, we said for the week, we expect the yen basket, look at it on the weekly time frame. You see this is the all-time low of the yen. And like we've been hearing, the recession in Japan and all that is going on there. So we expect the yen basket to just, you know, push a little bit more to the downside if it's going to clear this place. However, all this long, if you look at it on the daily time frame, you are going to see on the daily time frame, it already cleared this low here, and we expect it to pull back a bit to the upside. At least let it rally all the way into either this flip zone, and under this flip zone, we also have, at this flip zone here, we have a fair value gap at the top of it there. So that is going to be another POI for the yen basket. Let it rally a bit and tap into that level. Then we can say if it wants to short again, coming to clear the all-time low at that level. But I believe the buyers who changes the structure of the market here, they may want to defend price around this level. However, if they don't, when price gets here, can easily short it all the way to the downside. And if you look at it on the 4-hour time frame, you are going to see it's forming clean and clear bearish structure to the downside. However, we can still see a little bit push to the upside before it comes down again to form a new low for the market. Now, if you look at the yen basket on the 1-hour time frame, everything seems to be very bearish all the way to the downside. Yes, I know someone would say this is a clear market structure shift. Yes, you are correct. However, look at the higher time frame. It's going to give you a clue of what is going to happen on the lower time frame. Now, if you look at the yen correlated pairs, which is our GJ, since remember, if you are seeing the yen basket, you know, tanking to the downside, then we expect the yen correlated pairs like GBP, JPY to rally all the way to the top. And if you look at GBP, JPY from the daily time frame, we are going to see is heavily bullish all the way to the upside. You can see since it broke out of this zone, remember when boss said this place should hold and the place couldn't hold, it told us price is expected to come back, tap into that place and turn that place to be a resistance. And that was what we saw on Thursday when price pulled back into that level and reversed back to the upside. Now, where is GJ rallying to? To the moon, I don't know, and I can't say. However, all we want to see is when we see our schematic showed up in the market, let's take it and follow it in the direction we expect it to go to. Now, if you look at GJ on the 4-hour time frame, we are going to see, yes, we see some level of structural shift around this place. However, price is still dancing in here. So when we narrow it down to the lower time frame, that should give us a clue of what is expected to happen on GJ. So let's check the 1-hour time frame. On the 1-hour time frame, we already see structure broken to the downside. Again, price pull all the way back here. So remember, we expect some level of pullback on the yen basket. So if that is going to happen on the yen basket, then we expect GJ also to sell to the downside if the pullback truly would happen on the higher time frame on the yen basket. Now on 15 minutes, the now trade now, what is really going on GJ? Yes, we can see this is our last move here, and it broke structure to the downside, but not with a very full momentum. However, price came back all the way into that zone. So someone would mark this place as more of a shoulder for him or her to sell from. Now, if you do that, this is the zone. And inside the zone, we can see some level of confluence inside. This is on 15 minutes. So this is our schematic on 15 minutes for GJ. Now we can see fair value gap both left and right, that is an IOFED, and price coming all the way to tap into it, and that's what we are seeing, happening right now. So we expect as price, tap into this level, it should tank all the way to the downside. Now, if you are on now, this is a very clean level to sell from, yes, and your SL would be somewhere above here, and this is it. Remember, this is it, and your stop loss is just less than 15 pips. You get a point now, but make it 15 pips. However, if you are entering just right now on GJ, then your stop loss will be less than 25 pips. And what will be your target or the diagonal liquidity? Just clear them as much as you can to the downside. Exactly. So this would be it. 1:2 or 1:3. Just get somewhere, yes, around this place and get it that way. So that is that for GJ. And if you check it on the lower time frame, which is 5-minute time frame, what we are seeing on 5-minute time frame is still much more of price reversing back into that zone. But I would still advise, why not just wait a bit, price rally back into this zone here, which is into this zone with marked here, and your SL is less than 15 pips. So you don't, when price, kick you out, you don't feel it too much because you are not risking too much on it. However, you are going long again, like you are going short on the pair just to get what you want to get on it. So that is that on the GJ, if you are trading GJ. So if you have any question, drop your question in the chat box. Let me quickly attend to it. And before then, good morning, sir. So if there's any question, just good morning, sir.
Can you hear me?
Yes, can hear you loud and clear now.
Good morning. All right, good morning, Lekon. Good morning, CJ. Mike, good morning. The other gentleman, please, what's your name? Remind me. Our visiting lecturer. I'll be visiting Destiny. Good morning, Destiny. And everyone online, good morning. 51 people today. That's great. That's great. So let me just make a commentary. Let's keep adding people so we'll get value. We too will be encouraged at VFT to keep bringing value to the table. Back to what you showed, Lekon, on the 15 minutes. Now, let me make an observation. Trading is both a science and an art. What does that mean? There are some exact features, right? And then there are some other things that it is over time of practicing it. You will just know, especially if you trade the same pair and you follow schematics. You will just, I don't know how to say it, you just know, like when a woman knows how to cook, when she's starting, I'm not being chauvinistic, men too cook, please, sorry, when a person knows how to cook, because we have to be politically correct, when a person knows how to cook, when they start out, they can be measuring with spoon and measuring cup. But after a while, without measuring, they just know what to use. That happens sometimes in trading. So to say what you said, Lekon, that they can enter right now, why I would not advise anyone to enter, to buttress what you said that they should wait, is, do you notice that there are two double tops? Two double tops. In fact, technically it's three. There's a top directly after the fair value gap. after the shoulder. That's one top. There is another top on the 18th. I said around the 11 p.m. there. There is another top right where you marked like 15 minutes ago. That's another top. Now, not to mention all the other tops that are lower down. So typically, whenever you see double tops formed right after the shoulder and the sweep, they are going back to grab that liquidity. 8 times out of 10, they will go back to grab that liquidity on whatever time frame. So let's see on the 1 hour too. Let's see on the 1 hour. I hope you understand what I just said on the 1 hour. Okay. All right. Now, to show you this, between the 14th and the 15th, do you see a double top? 14th and 15th. There's a top there around Thursday yes, there, Wednesday, exactly. Right there. Do you see that's a top? That's a top. Do you see there's another top next to it? Do you see there's yet another top? 3 tops there. And I told you anywhere there are tops, because look at the logic. Price went up, it hit a resistance, it came down. It went up again, it hit a resistance, it came down. That means there are sell orders there and there are stop losses above those sell orders. You now see why price went all the way and grabbed the liquidity. Why? When it forms a top, it's creating liquidity. Why will it create liquidity 3 times? Who can tell me? Why do you think price will create liquidity 3 times? Close to each other. Let me see that. Why do you think price would create liquidity 3 times close to each other? Because price exactly to grab it. So even though we say shoulder, sweep, break of structure, return to fair value gap, don't just say, oh, it has returned to fair value gap. Let me just enter my sell. No, ask yourself, even inside that fair value gap, is it creating liquidity? How do you know this? By seeing double tops, if you want to sell, double tops, a resistance being formed close to each other, then it will grab that liquid resistance. After that grab, you can now enter the market. So that's just to buttress what Lekon said, that why don't you wait? Why don't you wait? So always look out for this. The shoulder, the sweep, the break of structure of the sweep, the fair value gap that is formed. And then when price returns back into that fair value gap or into that shoulder, does it create fresh liquidity to consume that fresh liquidity? All right, let's go back to 15 minutes time frame. 15 minutes time frame. Okay. Okay, fantastic. Fantastic. All right. Let's see it on 5 minutes. Okay. So it hasn't cleared that liquidity that it has created 3 times at all. Please juxtapose JPY. I'm saying this because there is a trade setup on GBP JPY, but we want to refine our entries today. We want to refine our entries. So someone can now look and say, oh, where should I enter? Of course, they'll say it in TDA plus. Okay, so if we're expecting price to go down, that means we must see JPY basket go up. And we have to make sure that JPY basket 2 has cleared whatever liquidity it has created, and then it now wants to go up. Can you see if any double bottom was cleared? Because now JPY is looking to go up. Do you see any double bottom, any support level that was cleared, where liquidity existed that was cleared? That's liquidity there. It was cleared. It was cleared. Now there are 2 other pieces of liquidity just below. That clearance, that sweep, that's one there. There's one on the other side. So if it clears those 2, Go, someone is looking 3 a.m. 3 a.m. before 3 a.m. all the way. Go before 3 a.m. Yes, down there. There is liquidity there. So that's a bottom there. And if you notice, it coincides with the other bottom. So there were two double bottoms. It cleared that liquidity. There are another set of two double bottoms close by. So do you see what is happening? It may clear those ones. Then if it clears those ones to the downside, GBP/JPY will clear its own to the upside. Then it can start coming down. This is for those who have the time to watch the markets. If you don't have the time to watch the markets, just put your limit order a few pips away from that double top and then leave it there and wait for price to come and do its thing. So that's basically that. So that exactly right there. Right there, exactly. You can place your stop there or the higher time frame, sorry, the fair value gap above it, that order block, a 189 spot, yes, right there, and just wait for price to tap into that level, okay? All right, so I'm saying this so that because some of you may enter sell now, then it will go stop you out and come back down. Usually when that happens, is because you didn't notice that price had created liquidity that it wants to tap and consume. All right, so that's that. What other issues? Let me see if people have questions. I don't have much to say. The team has done a great job. Who has questions? Someone asked a question. Is it good to trade dollar pairs during bank holidays? Well, the challenge is if you're trading during bank holidays, don't expect much volatility. Why not trade crosses? So for example, if there's a USD holiday and I want to trade AUD USD, instead of trading AUD USD, I can choose to trade AUD CHF or AUD JPY during the London session. Why? So that I avoid the dollar, which will be low on liquidity, and I trade Australian dollar versus Swiss franc or Australian dollar versus Japanese yen. So every time there's a bank holiday and you see there's a great setup, you may want to take that setup, pairing it versus the Swiss franc or the Japanese yen, all right? But note, if you wait the next session after the holiday, right? So if, for example, I want to trade AUD USD, I want to sell AUD USD, but there's a bank holiday in the US, I may look at AUD CHF and AUD JPY and trade those ones. Or I can look at AUD JPY, AUD CHF, and allow them to make their move, knowing that when the bank holiday ends, the next session after the bank holiday, AUD USD will follow what those pairs did. So one way is to trade it during the bank holiday by pairing it versus another cross, or to trade it after the bank holiday by pairing it with USD, but use AUD CHF and AUD JPY to confirm if that direction is really where price is going. And of course, this for those of you who understand economic sentiment, knowing fully well that USD, CHF, JPY, gold are safe haven pairs. So if it is truly a risk on or risk off or safe haven play, it will affect all those three eventually, if not immediately. I hope this makes sense. Hand it over back to the guys on the floor, except you have a question for me. If there are no questions, let's keep watching GBP/JPY. See if we can get a clean trade today. All the best. Cheers. God bless. Over to you, Leko.
Yeah, thank you very much, sir. All right. For those of you who are looking forward to trade with us live, all you need to do, you are going to see in the chat box there, all you need to do, the 3 steps you need to take. First, using the link there, create your account with Okta. After you create your account with Okta, fund it with at least $100, $200, $500, $700, $1,000, just fund it. Then send the screenshot of your deposit to us on Telegram using that link there in the chat box. So when you send the link to us, we are going to verify and add you to trade live with VFG. So you are going to trade live with us using that particular steps when you follow those steps. Also, remember this week is also our training for the ATM cash flow. For those of you who don't, like to trade probably because of work and the likes like that, work, engagements a lot in the week, and all the only time you have is just weekend, you can easily enroll for our synthetic training, where we teach you how to trade the synthetic market profitably. It's coming up on Wednesday. We'll be teaching you how to trade the synthetic market. You have understanding of market structure. We are going to give you our customized indicator that are very profitable. We are also going to give you access to our community, and at the same time, access to our tutor on the community. In case you have any problem or any question, we are going to attend to you there. And the cost of this training is just 100,000 naira for the first 20 people. The cost actually is 150, but we are taking 100,000 naira for the first 20 people. So if you want to do that as fast as possible before the training starts on Wednesday. The training starts Wednesday by 10 a.m. in the morning. Remember that in the afternoon, we used to have our top-down analysis for the New York session starting by 3 p.m. So make sure you share this link with everyone you know. By 3 p.m., we are going to be coming up again for our New York session, where we are going to be analyzing the market and see what happened during the London session, what are we doing again during the New York session, and at the same time have an overview of what has played out in the day and prepare ourselves again for tomorrow. So make sure you share this link with everyone. And at the same time, remember, for those who I don't know how to trade, I don't know anything about it, but I have one money in the bank so that it won't depreciate the way the exchange rate is going now. We have a very special plan for you about our copy trading coming up tomorrow. So we are going to announce that tomorrow. We are going to get the full details of how you can go about that tomorrow morning. Make sure you are here on the TDA session, London session tomorrow morning. The link to the TDA are there. And our other courses is still very much available. We have our Sunshine Scalping Plus, we have our FS Bootcamp, we have our ATM Plus that you can easily take up. And at the same time, our value flow models. Our value flow models are the one that is going to give you a very deep insight into a particular pair that you are trading. You know, when you, like I always say, when you go to the hospital, you are going to see everybody is called doctor, but everyone know their area of specialization. For example, now if you are trading gold, you know your area of specialization is gold. Then we have a value flow model for gold. So we are going to give you all that if you enroll for our value flow models, for you to be specialized on one particular pair and you become the master of trading in that particular pair. And the cost of our value flow model is just 150,000 naira. So when you get that, you have the best to it. Always reach out to us and we give you the best of it and the best of service. We have our WhatsApp line there for more inquiry. If you have any question or you want to make further inquiries, the WhatsApp contact is there. And remember, our bots are there, you know, trading and making steady profits, steadily. Our bots are there doing greatly well. You know, we have some bots we've not released, like we said on Friday. We are still keeping those ones. When we release them, it's just going to look like a bit of shaker. You get the point now. So we don't use it openly, but anytime we release it, you know VFT has released something very great and very big. So you can always reach out to us to get any of our bots very, very affordable. Just contact us on this WhatsApp line. We are going to give you every information you need for the bot. So remember, this TDA is powered by our preferred broker, which is Octa. Always and always for a reliable trading system, very good spread. You know, during some news, all those your broker that you've been using that have been slipping you to hell, this won't slip you to hell. All hidden charges, everything, you know, you want to hold trade overnight, they are giving you all manner of charges that you don't like. Make sure you all you need to do is just move from all those evil brokers and come straight to Octa. They are going to help you and give you the best experience that you like. So Octa is the one powering this TDA session. It's powered by Octa. Make sure you open an account with Octa and have the opportunity to trade live with us. Thank you, cheers, and God bless. See you during the New York session. I look forward to having everyone on board again. Cheers, and God bless.